The growing preference for digital transactions in Nigeria seems to have made tremendous inroad in the banking and financial services industry. Fintech companies have been on an exponential upward trajectory as a result, with a number of them transcending expectations by becoming unicorns, all within a space of 10 years or less. But there's now a widening chink in their armor, that of trust deficits from the public, which admittedly also affects the traditional channels of the banking sector. In 2023 alone, digital banking channels brought in about 438 billion naira for just 10 financial institutions in Nigeria. Such levels of success, many believe, continues to overshadow the downsides of the digital revolution. Well, we're now being joined for a conversation on the ascendancy of digital banking in a depressed economy like Nigeria by Segun Oyedele, a software engineer and founder of Raise Digital Services. Good to see you on the morning show. Thank you for being here.
Thank you for having me here.
Good morning.
Good morning.
Good to have you.
All right. In my introduction, I kind of touched on the exponential growth of fintech companies in Nigeria, with several already becoming unicorns in less than a decade. That's definitely impressive.
Yeah.
However, when we look at the trust issues that are beginning to emerge, both with digital platforms and traditional banks, how do you think that this trust deficit is affecting the growth of traditional banking? But also, when we look at fintechs, do you think that is something that affects them as well?
Yes, the trust deficit is one that affects every part. In a traditional bank or even within the conventional system of saving, let's say, give an example, a thrift system like Ajo, you come together, you contribute money with friends, and all of a sudden, whoever is saving the money has a memory loss or someone, travels and runs away with the money. We've seen people getting loans from bank, using it to travel out and never paying back. So the trust deficit is both on the consumer side and also on the financial system side. So it's something that affects both the conventional, traditional banks and also the fintechs. But with the fintech, I think with the leverage of technology, we've been able to bridge some part of that gap in terms of the trust, starting from even a better system of security, KYC, building trust, building customer-centric solutions. So that's been one of the things that the fintech has done better than the conventional banks.
What about on the back end of protecting customer data? Because I'm not going to mention the financial institution, but just last week, I'm sure you probably know the one I'm talking about, that had these hackers phishing. And what we do know is that they might actually have the information of all of those customers. Is that how far off are we with that? Is that something that is really being looked in by companies at companies like yours?
Yes, we take data security very, very, very important at Raise. Compared to conventional banks, we've interfaced with a couple of conventional banks, and I'll tell you for a fact, I was shocked at sometimes when we receive some of the API documentations from this bank, and I'm like, how can you guys be this big, and this is what you have in terms of your infrastructure? Right. If you look at most of these banks, the way they make most of their money or the way they started out, security wasn't really a major concern. So they have bigger fishes to fry, and I don't think they're paying enough attention into the security part. There is not enough encryption. Most conventional banks sit on the reactive side. We stay on the proactive side. They wait for something to happen, then they try to create a solution for that data breach. But we try to we take more preventive measures rather than taking counter security measures. We're going to wait for this to happen, then we're going to see, what could we have done differently? How about you think about what could possibly happen from the outset and provide security measures around that? So a lot of the traditional banks, I don't think they're paying enough attention into the security part, and I'm glad the federal government is starting to own into that as far as regulations, making sure people are staying compliant with the NDPR, the FCCPC, and the likes, making sure consumer data is protected because more than the finances, the data is very important. There are many people's personal information out there, identity information out there that could be compromised just from one data leakage from a bank. And at the end of the day, most of this data leak don't really affect the bank as much as it affects the consumers, right? It does affect the bank because it hurts their profits, but my information is out there. What if someone takes a loan in my name and things like that? How do I prove that it wasn't me? So I think there's still more work to be done. But with the digital technology like Raise, we do a lot of encryption. We leverage technology. Everything is encrypted. We take owning into our KYC measures to make sure only the right customers are getting onboarded onto our platform.
Raise is not a bank, is it?
We're not a bank. So we
What are you?
We provide digital services. So we're sitting on top of infrastructures of conventional banks.
Okay.
We've seen where the weaknesses are. We've seen where the strengths are from different financial partners. So we're bringing all of the strengths together and also improving their weaknesses. Just so we can provide a unique experience or a better experience to our end customers. So most of the customers that bank with us, they have conventional banks, they have traditional banks, but they have concerns about those traditional banks, right? We cannot stand alone as a bank without the infrastructure or just the capacity yet, but we can improve the current system that we have. So there is no point trying to rebuild something that works to an extent. Why don't you partner with? So we've done a lot of partnerships with some of these major brands, major banks, and what we've done is we've built an infrastructure on top of what they have to provide better security and better services to our customers.
All right, let's talk a bit more about regulations,
Right.
and then customer, the impact of the customer and the satisfaction.
Right.
Given that, when people look at how the whole mess about, cryptocurrency, banning and unbanning, and then even the e-naira thing with the CBN,
Right.
nobody is sure, what has become of those things. Do you think that people are sort of in tune with, the whole idea of digital banking, digital transaction? Is there enough trust?
There's trust. I think people are starting to see what they could do better. At Raise, our tagline is unleashing new possibilities and redefining limits. Right?
Okay.
We're trying to redefine the limits of what you can do with finance. And through that, we're bringing new possibilities that you can do. There's been some level of trust, particularly within the small and medium enterprise business owners. They contribute to about 40% of the GDP. And a lot of them, they've been using digital banks. 2021, we had only about 115,000 POS terminals.
Okay.
As of today, we have over 1.1 million POS terminals. So there's been a great increase. As of 2021, Nigeria was probably number 5 in terms of digital payments in Africa. Right now, we're number 1 and 6 in the world. So there's been a great attraction. In 2023 alone, we processed over 3.7 billion digital transactions in Nigeria alone. So there's attraction coming from that side. People are starting to trust it because they can see what the limitations of their conventional banks are.
Yeah.
So the digital banking, like Raise, we're pushing those conventional banks towards agility and competitiveness. So that's what we've done.
Okay.
So there's good attraction in that space.
All right, just on top of that, or at the back of it,
Right.
will be the question of capacity.
Right.
Part of what we've been hearing will be that part of why the traditional banking system is slow or they're struggling is because many of their staffers, are jackpying abroad.
Right.
You've spoken about, structure
Right.
and capacity. Do you think that, at what point would somebody like you jackpot, for example, if the attraction is there?
So I'm here for the people. We've built a solution by the people for the people. It's a democracy solution, right? And the reason why I'm saying there is no jackpot in our case is we don't have a capacity issue.
We don't?
We don't. For as far as the digital bank, we don't necessarily have a capacity issue. Most of the conventional banks, there is need for hard labor for things to be done because things are done traditionally. If you're leveraging the right technology, then you reduce the manpower that is needed to carry out the same set of transactions.
Okay.
If I have to process 1,000 checks of customers, I'll need probably 5-10 people that will work a couple of hours to do that. If I have a digital technology that can process 1,000 checks in 1 hour, I don't have to pay salary to that digital technology. So that's one of the things that, and not to fault the conventional bank, it was just at the start of these conventional banks, the way they were built and the people they were built to serve, there was no need for things like this. Now, people are starting to process even more transactions than ever before. Like I said, just in 2023, there was over 3.7 billion digital transactions. As of 2021, the customer satisfaction in terms of digital payment rose from 19% to 40%, which means payments for goods and services and all of those things, they are starting to become digital. People that are receiving their income payment digitally has risen from 16% to 17% within the past year. So people are starting to lean, when was the last time you had to walk into a bank to pay for your DSTV subscription? You can easily do that. You have to pay for
DSTV.
Yeah, you have to pay for your electricity. You have to do. You can do it on your phone.
Buy data.
You have to buy data. You can do it right from one simple banking app, right?
Yeah.
So there's less need for more labor. But with the conventional banks, people are going to jackpot because the economy is not favoring a lot of people, right? And people need to find whatever greener grass means for them. But beyond that, we need to start looking at what can we do to make Nigeria the greener grass that we need.
So we do have the capacity.
We do have the capacity. We have a lot of brilliant minds. If you've seen post-COVID, there's been a lot of attraction into the African space. Many employers from the diaspora, they are employing African talents. We've had several foreign investors. Unfortunately, many of them are also leaving. But they are coming, they are trooping into Africa in their numbers because they know that we have the capacity, we have the brain power, we have the strength. Nigerians are resilient. We're very, very smart. In America, amongst the foreigners in America, Nigeria takes the leading chart in terms of educational success. So we have everything we need within us. It's just, why are we not making it possible for our people?
All right, then as we begin to wrap up, I just want you to touch on this. Critics argue that the focus on digital banking might be contributing to financial exclusion, especially for those without access to digital tools or the internet. How do you respond to these concerns, and what can be done to ensure that digital banking in itself is inclusive? So
right now in Nigeria, about 25 to 40% of Nigerians are the only ones that have smartphones. We have, as of 2021, our population by the census was 170 million. That means we have at least 87 million people that don't have smartphones. That is not the problem of digital banking, right? So the solution to that, it's one that has to come from a collaborative standpoint. You know, there has to be an interface between the digital bank, the telecommunications companies, the government building infrastructures. The movement of digital banking to some of these traditional areas or rural areas would have to be with the government support. You know, why would I want to move a bank? And that's even the advantage of digital banks. For digital banks, you don't need to have a branch for people to have access to your services as compared to conventional banks. But if the government provides the right support, if there's enough investment into infrastructure, then we could easily, you know, get to the underbanked. Then there's also a major education gap. There needs to be enough investment into educating people. How do you tell a grandmother in a village that she can pay for something without having to go to the bank? That's what she's been used to for 60 years of her life. So how do we, you know, curate stories in a way they will be able to understand, right? So it's not one for just digital bank. Digital bank is not excluding the underbanked, you know, but digital bank is the bridge where the underbanked can get banked with the right support from every other sector. So we're talking about the telecommunication and all the likes.
All right,
there are a few of audiences online who are asking how you can be contacted. I'm wondering, is this something you're able to reveal?
Yes, you can reach out to us on raiz.app. That's our website, raiz.app. And we'll
that should fix it.
All right then. Thank you so much, Segun Funmi Oyedele, digital banker and founder of Raise Digital Services. We appreciate your time and analysis here on The Morning Show.
Thank you, Segun.